It's time for Wise Money with Korhorn Financial Group with financial advisors Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of Wise Money with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. My name's Mike Bernard. I am your host. Thanks for being with us. With me in the KFG studios, Joshua Gregory, and for the first time, insurance advisor on our team, Leann Davis.
That's right. Hey, what's the biggest mistake people make with their home and auto insurance? Hopefully you're not making it, but we're going to help make sure you're not making it today on the show as we discuss your personal insurance needs with that special guest, Leann Davis.
Yeah, that's right. We're excited to have her on the program. Guys, I've been cooking it for a while. I've had this idea of having Leann on the show for a few months, so we're excited to have her. If you have any questions, insurance is confusing. We're going to make some sense out of it today, but if you have questions, reach out to us. We can talk about it on an upcoming show. If you have needs, reach out to us as well. You can find us online, wisemoneyradio.com. You can call or text us, 574-222-2000. That's 574-222-2000. And all over social media as well. We've got Facebook and Twitter and YouTube all rocking and rolling. Just search Wise Money Radio. By the way, every episode is right there on YouTube if you'd like to engage in the show that way. Welcome to the show, Leann.
Thank you.
Yeah, we're glad to have you here, and we're going to talk about some insurance things, make some sense of it. But before we dive in, as your first time being on the program, hopefully not your last, why don't you share just a little bit about yourself? Give us an introduction.
Let's see. My name's Leann Davis. I've been in the insurance business for 30 years plus. We'll say it that way. I don't look so old.
It's not a complete disclosure there, is it?
That's right. I started out as a part-time gig and just for extra money, and then I loved it so much that I ended up making it my career.
That's great.
We live in Plymouth,
Yep.
Indiana, with my husband of 27 years, 4 kids. One's not really ours, but kind of. And we live on a farm. We have 3 cows, a couple dogs, cat, chickens, you name it.
Who's got you beat? Who's winning here between
Do you
Josh
need
and
any
me?
sheep?
I don't need sheep.
You don't? Okay.
I'd like to have a goat, but my husband won't let me. So,
Okay.
Josh, you have a goat, right?
I have a goat and some pigs.
you have a goat? What kind
my
of goat?
goodness.
It's a Nigerian dwarf. So it's
It's a
a
little
little
one.
one. It thinks it's a dog, actually. So
Okay, well, I'm going to reel us in here.
that's good.
I
Because
want one.
I have stories
The
that
farm
could involve
animal.
insurance here.
Oh, that's funny. All right, yeah, maybe we'll get into that. We've got some interesting topics we're gonna hit today, and several listener questions. But before we get into all of that, I want to start at a high level. And Leann, you've admitted how many years experience you have. I'm just kidding, but
Yeah.
I want to tap into those years of experience and just get your opinion on what do you think the biggest mistake is that the average person makes. You've got a chance to meet a lot of new individuals, and as they've come in, you get to analyze and see what their current insurance situation's all about. What do you see the biggest mistake being?
The biggest mistake that I see is that everyday people that don't know insurance, they want the cheapest that they can get at the lowest rates and the lowest liability limits,
Yeah.
and that's not good for them.
Right.
Not in this day and age. Even on a homeowner's policy, they want it insured for what they can sell it for, but that doesn't mean that they're going to get out of it
Yeah.
if there's a total loss.
Right.
That's the biggest argument with homeowners, more so your older homes, because they're old. They don't build houses with big high ceilings and the big high moldings and crown molding around the ceilings, and they buy it because they like it like that. That's why they bought it.
Right.
But if there's a total loss,
Right.
they don't build them that way anymore. It's going to cost more to build that house, and people don't seem to understand that.
Well, I can't necessarily argue with them either, but I would agree with you. People look at that coverage on, say, the home, for example, the dwelling coverage. When are they going to update that language? That's like so 1980s there. Dwelling.
Dwellings.
The dwelling coverage, and you say, I can't sell my house isn't worth that. I know.
Yeah, they pay $100,000 for it because it's older.
Yep.
but they buy them because that's what they want. They want that old Victorian.
Right.
They love that feel and that look, but you can't replace that today. Builders don't build with that material.
Right. And if you're trying to insure it and protect that house and it burns or there's a tornado, then you've got to have an insurance value that will replace that house.
Replacement cost
replacement
coverage.
cost. Yeah, that's right.
That's
right.
the biggest argument we see on homeowners insurance. Well, I can't sell it for that. Well, if you lose it, you can't build it for that either.
Right.
So is it really worth
Yeah.
paying the less amount of money for the premiums on the home to not get what you're paying for? I mean, that's what we look at. And as far as the liability insurance on an auto policy, you hear the other carriers, Safeco, Geico, we can insure your car no matter what. But they're only offering you the lowest limits of liability that you can
Which is
get.
rarely, I would say rarely appropriate, and maybe, I don't even know a situation where that would be appropriate.
In my opinion, it's never appropriate.
Josh, what would you say? In your experience, you've got, 15 years of experience helping advise people on home and auto insurance. What would you say a big mistake is? Or the biggest?
Well, I would have two. I'll give the small one first, and maybe just because it's recent, had some new clients come in and they were explaining some of their insurance history with other agencies around town. And it's always interesting to me when people start expressing regret that they didn't have the right insurance and they didn't know it, or their insurance didn't perform the way that they thought it would when some sort of an event occurs. And, we've come through some stretches here where there's been lots of rain at times, water damage, or sump pumps failing.
Yeah.
And if you don't have the right coverage in place, if your agent didn't add a few endorsements or sweeteners to the policy, you might find out the hard way that you actually don't have the coverage for certain events. And so one of the regrets that I see quite often is that people don't understand what they have until it's too late. And maybe that's a good segue into the much bigger mistake, and that is maybe not having the right relationship with the agent themselves, where they understand your financial life as well as you do, or they are somehow integrating their advice into your overall financial plan. And that only happens with great dialogue, great communication. If you asked yourself real quickly here, well, how much does my insurance agent really know about my financial life? Most people would say, well, they know what cars I drive. They know what my address is.
Actually, I would assume most people say, I don't need to tell them a whole bunch. They don't need to know a whole bunch about my personal financial life.
That's right. So I'm not throwing stones at anybody here. I'm just trying to point out that the agent, if they're not asking the right questions and you're feeling like, hey, this is a need-to-know basis and you don't need to understand where I'm at, you might not have adequate insurance.
Yeah,
and so that could be a mistake.
We're actually going to get into that next. I'm going to throw another one out there. I agree with Leann completely. My first, the biggest mistake that I've seen in my decade plus of experience is that people are too focused on they're not as focused on coverage. They're focused mostly on price. And so what ends up happening is they have coverage that's inconsistent with their financial life. You sit down with someone and you look and they've got $50,000 bodily injury, 50, 100 limits, and their net worth is 300 or 400,000, and you say, well, there's some disconnect here. But then along with that, I would add in the mistake that we see often is people that have done a good job and accumulated some wealth and done a good job managing their finances, and they don't have something called an umbrella policy.
Exactly.
And umbrella. And we're going to actually talk a little bit about what that is. You've probably heard us talk about the umbrella policy on the show before, but there's but there again, that points to the message of a lot of people are driving around, walking around with insurance coverage that is inconsistent with their overall financial life. I would even go so far as to say that even applies to deductibles as well. I see people that have saved up a good amount in cash in emergencies and cash reserves, and they're driving around paying the insurance company a lot of money in premium because they have a $100 deductible. And yes, if you have a claim, I'd want you to pay as little as possible, but you're paying more in premium. We're going to put Leann back on the hot seat. How do you find out what coverage you need? That question and a lot more coming up here on Wise Money with Korhorn Financial Group. Okay. I can't see because we put that up.
Oh, you don't have a
that's why
reflection?
I was rambling, because it was like, well, I can't give it back to anyone. I can't see, and I won't know when to take it back. So I'm just going to motor for a minute. And so was this helpful? Was this helping? Okay. Because if it's helping and we need it, then we'll find a different place to put the clock. But if we...
So YouTube viewers, we have a clock in the corner, and Mike looks at it, apparently a backwards version of the clock in the reflection on the wall, but we had it covered up this morning. So it's amazing. You landed that plane right on time, though. Nice job.
But I wanted to throw it back to Leann, but I just needed to keep talking because I wouldn't have really known when to. So anyway, the also for YouTube, if you're in love with the tarp behind us, sorry, it's going bye-bye.
It'll be up for sale on
we are
eBay.
So we've got their logo and everything printed on the wall. It's just now it reflects with the lighting in here, and so it doesn't look good. And so we're trying to figure out, well, how do we improve the lighting and so on, so the decals, so that we can get that tarp down and everything will look good. So in the process, we covered up a part of the wall that I use as a reflection to see the time. Okay, so you
story,
only
Mike.
I only threw it to you once,
Thank
so you're going to
you.
be talking more, but that's a good trial for you. So
I thought it went well. What do you think?
yeah, and it goes fast.
I want to hear about cows.
You do? We have 3
What kind?
black ones.
Black ones, black cows.
I have no idea. Wait.
Casey, you want a goat?
Oh yeah, I've been wanting. I finally got the wife to kind of come around to it.
Nice.
Yeah, I want to go.
That's sweet. We used to have goats. They used
For
to
milk?
come up to my back door.
What's a goat good for?
The kind that we have is a
Milk and
is a
keep your
dairy.
lawn clean, and they're funny, and they have a great sense of humor.
They are very
Yeah.
funny, and they're
have
actually
personality.
smarter than you think.
Oh yeah.
We had them. They would come up to the back patio door and actually knock on the door for granola bars
Oh my goodness!
every night.
How do you know they want a granola bar as opposed to a Rice Krispie treat?
Nutri-Grain or
Because they do, yeah.
I'll take an omelet.
Farmer's omelet.
She was like, "Hello, we're at the drive-thru."
Yeah.
If you watch goat videos on YouTube, you'll fall in love with goats.
Yeah.
Yeah, they're so funny.
I'm too.
Especially the baby goats.
Oh my gosh, yes.
They're cute as heck.
Yeah.
I'm too suburban. I am way too suburban.
I'm a suburban boy
I
myself,
know,
but you can convert.
You have.
Yeah?
I came close to bringing one back from the fair a couple years ago.
Well,
That's where we got ours. It was an impulse buy.
no way. Who buys a goat on an impulse buy? That's unbelievable.
Shows the fair, right here in Blizzard, to check out and just grab one on the way. Up in the
No,
car.
Cow.
I had been lobbying, and Andrea actually kind of fell in love. So I had been ready for a while. She came around. It was more an impulse on her part. So
Do you have property?
10 acres.
Oh, well, there you go.
Yeah.
Our goats and sheep are the weeding crew. They do our landscaping for us.
Oh, yeah,
cool.
yeah.
All right. So this is the other thing you need to know. We're never on outline. And so technically we're still in the middle of that first segment. So
That's okay. I'm just following along.
we
I
just
just have
go
my
with the
little
flow.
highlights.
Go with the flow. So
I'm going with the flow.
So I'll complain about this marketing campaign, talking about how you have too much coverage, and then we'll go into, okay, how do you find out how much coverage you need? And expect again that Josh and I are going to answer as well. I mean, you've got the 34 years of expert experience, but I mean, we'll help out with the answer. So, all right, we ready? So we'll probably get to 2, if not 3. Questions in here. We'll see. Buying a goat on eBay? How do you know how much home and auto insurance coverage you actually need? Name your price tools, all these great commercials. How do you really know? How do you know what you need? We're going to answer that question in just a second. This is Wise Money with Corhorn Financial Group. Thanks for being with us. My name is Mike Bernard, coming to you from the KFG studios. With me here, certified financial planner Josh Gregory, and insurance advisor Leann Davis. So happy to have her expertise on the show. I want to say thank you to the attorneys at Ladue, Curran, and Keene, as well as First State Bank for making the Wise Money Show possible. Thank you, thank you, thank you. If you have any questions, let me just remind you, you can find us a few different ways. Online, wisemoneyradio.com, social media, Facebook, Twitter, YouTube, just search Wise Money Radio. And you can call or text us as well, 574-222-2000. That's 574-222-2000. So usually I'm a huge fan of insurance commercials. If I could rank them, I'd say the worst commercials are Doritos commercials. Just better than that, slightly better, are the Coke or Pepsi. Those are kind of annoying too.
We're going to get hate mail
But
on Monday,
listen,
aren't we?
but listen, the car insurance commercials are hilarious.
They are good.
They are hilarious. Here's the problem though. There's a radio campaign, some radio commercials out right now talking about how you probably have too much insurance, and so don't pay for insurance you don't need. Call us, and we'll make sure you get you get rid of all this excess. And now what's interesting, I'm just going to point out, the previous marketing campaign from this exact company was state minimum coverage for less. So they are out there promoting that you should have the bare minimum just to be legal. And then now they flipped the script and said, you probably have too much. Call us and we'll make sure you only get the little bit that you need. I totally disagree with
That's
this.
the worst advice ever.
It is, and it's contrary to what we see all the time, which is the average person's driving around with too little insurance, not too much. And so that's why this really grinds my gears. Leann, and I'm going to open up to Josh as well. How do people find out what insurance coverage they really need?
Well, at Corhorn Financial Group, we ask the right questions.
Yeah.
We don't just take their deck pages and say, oh, okay, we'll give you what you have now. We analyze what they have, what they need. Do they have kids at home? Do they have a pool? Do they have a trampoline?
Mm-hmm.
Are they exposed to a liability that some people maybe not be exposed to? For instance, the pool.
Mm-hmm.
We don't just say, here's what you got. You can take it and run with it.
Yeah.
And we try to get you the best rate that we can. We want to make sure that you're protected as well.
Right. The best price with the worst coverage is not that's just not going to happen at KFG. Asking the right questions. Well, I've found, and maybe you can speak to this too, we have a lot of new people that come in, and we ask them more questions than they're used to from an insurance agent. Do you get that? Does anyone ever get upset with you and say, why are you asking me all this?
And so maybe they don't want to answer that question, like, it's not your business how much money I make.
Yeah.
Well, maybe it isn't, but I want to make sure that when you walk out the door, that you're covered and you're protected.
That's right.
And that you can walk out feeling like, okay, if I'm in an accident on my way home, I'm not really going to have to worry.
That's right. That's right.
My house catches on fire, I'm not going to have to worry because she explained the whole thing. Corhorn doesn't hold back, that we explain it. We protect them. That's what we do.
Yeah.
Yeah, I love that actually about our insurance team is they put their teacher hat on first, right? And they explain why is it that you need this particular coverage, and it all has to do with your overall financial life, because the whole purpose of the insurance is to transfer risk off your shoulders onto an insurance company who could handle a loss better than you. And yes, that costs money. Mm-hmm. My kids were asking in the car the other day, what in the world is insurance? And I explained it to them. And they said, well, doesn't that mean you're giving them money and you might never get a payout?
Yeah.
And I said, absolutely. But that's what people focus on, is that I'm giving money, and what if I never get anything in return? And I tried to emphasize that, well, you're only giving money to cover the types of risks that you wouldn't be able to bounce back from financially.
Well said.
Right? Yeah. And sometimes that actually has less to do with the little fender bender, the little Mickey Mouse car accident stuff, and has a whole lot more to do with the risk that you injure a person. Right? Mm-hmm. When people get damaged as opposed to cars, the price tag is breathtaking. Sometimes people die in those car accidents or they can't work anymore. And so trying to protect, put the moat around the castle, so to speak, put your line of defense in place so that as you're building for your future, you're not at risk of having it all come unraveled if the wrong event occurs.
We believe in financial planning. The show is about financial planning. You know, there's 6 areas to your financial life: present financial position, protection planning, tax planning, investment planning, retirement and college planning, and estate planning. So this protection planning, it is a core focus of your overall financial plan to protect all of it. So if you're listening to this show, trying to get some wisdom on how you can build wealth and make smart decisions, don't look at it that any dollar spent on insurance is a step away from reaching your goals. No, it's protecting those goals. I would also argue, I mean, we believe that the only way to get the best coverage and the right coverage for you is through the context of a financial plan. Leann, we were talking about that right before we turned the microphones on, about how oftentimes here we've got experts like Leann and Cindy and Alicia and our team and Matt and our team of insurance professionals, but we're collaborating. We're working with the financial advisors so we're collaborating together to say, hey, here's what's going on in this person's financial life. Let's make sure we get the right coverage.
And as an insurance advisor, when a wealth advisor gives us their deck pages, we say to them, hey, did you know that they don't have this coverage?
Right.
So not everybody catches it.
That is very helpful because we're often looking at insurance through the financial planner's lenses, right? We're looking at what are the terrible things that could go wrong. You're looking at the nitty-gritty details and making sure that you have all the right details in place, all the right components. And you're exactly right. That's why I think it's complementary to have more than one set of eyes on those deck pages, also known declaration pages. So those are the pages that actually spell out what the coverages are. It has the price tag on there. It's kind of a summary of what your insurance contract looks like.
If you're motivated right now, and I hope you are, every show we try to spur you on to your next wise step. Review your deck page. Right? Do you need to read your entire policy? Well, if you're a nerd like me, you might want to. But if you just want to get the gist, look at your deck pages. It's probably 2 pages for your home.
If you don't understand it, call us.
That's exactly right.
We'll be happy to look it over for you.
That's the other thing. As I was teeing it up for Leann and listening to Josh, I wrote, that's the other thing that you need to know to make sure that you've got the right coverage. You've got to understand your policy and your coverages. Your insurance agent should be teaching you. So as hilarious as I think that Name Your Price tool is and how those guys can sing in harmony and the guy, Jamie, starts crying about it, that is hilarious. By the way, Name Your Price tool, what does that mean? No, name your coverage. My goodness, we've got this backwards. So price is critically important. It is important. We just argue it shouldn't be the most important. The coverage needs to be the most important. And that coverage needs to fit within your overall financial plan. After the coverage, you've got that, then go out and get it at the cheapest price. Let's talk about price for a second. Oh, go ahead, Josh.
Well, no, I was just going to make the comment that this should also be reviewed, not just in the context of what's your home and your auto insurance, but what does your entire insurance package look like? I've seen some examples recently where people were actually overinsured on their home and auto. There was money to be saved there.
You sound like that commercial, Josh.
Yeah. No, they were overpaying. I'll say it that way. There were more competitive options to get the right insurance in place, and we were actually able to free up some dollars to help them get some coverage that they did not have in place. They didn't have life insurance. And so, we took a more holistic approach to looking at their insurance spend. What's that budget look like? And it's all about making sure you have all the right types of insurance. And yes, we care. We don't want more dollars slipping through the cracks than necessary in the form of insurance premiums.
Yeah, you got to have goals in your financial life. You've got to be striving to reach those goals, but then you also need to have play good defense and have some protection in place as well that's appropriate for your situation. So what about kids? College is back. That's old news. Kids have been back in school for over a month now. But what if something happens to them while they're at school? What if they're in a car accident? What if their stuff is stolen or damaged? We're going to talk about that and listener questions coming up on Wise Money with Korhorn Financial Group. I was going to say with Leann Davis.
It's my show.
It is.
No.
It's
All right.
nepotism since I'm here.
Yeah, it can be your show too.
White nepotism.
It's hot in here.
It is hot in here.
And this was open too, so I'm not sure, because it was hot like a month or so ago. We had a hot day for some reason, and it's as open as it should be. It's just, I think the control is out there, so what's happening out there is deciding if it's coming or going.
Did you tell the elephants to stop jumping?
Yeah. Well, I sent a message up to Ryan, but he's in Indy today, so I don't know who it is.
I will tell you that it only bothers us. It is never picked up by the mics.
Okay.
It is a distraction, though.
It does
Yes,
bother me.
Yeah.
I didn't hear it.
I just wanted to clarify that, because in my mind, I'm like, it has never been picked up.
Well, you've had 4 kids, so when you hear, people
Oh, yeah,
jumping
kinda
around
block
and
it
yeah,
off.
you just yeah.
I get worried when it's quiet with my 2 little ones.
Yeah. Yeah.
That's right.
But when they get to be teenagers, that's when you kind of block everything out and kind of not pay attention to them anymore.
All right, so I'm thinking about. So we're in the 3rd segment. We're halfway through. I want to talk about. I guess let's hit both of those, and then we'll get into listener questions. Do you have a take, Josh? I think it's important to. How does it work? So basically, be in segment 2.
So youthful drivers,
Yeah.
that concept.
I say, what if we spend this 3rd segment talking about youthful drivers, and then last segment we hit questions, a couple questions. So basically, get back on track, but just one segment behind the outline.
I don't know how do you know how long your break is?
We decide.
Yeah, we.
Oh, it's
we
up
make
to
it
you?
Yeah. Yep. All right, you ready to go? Let's go.
Yeah.
They make the rules.
We make the rules.
All right. Yeah, I've got some good follow-up questions, or I'm curious about a couple things with youthful drivers. So I'm gonna put you on the spot.
Okay.
I hope you got a lot of sleep last night. You're
Yeah.
gonna be tested.
Are you kidding? I had to come on this show. I got no sleep last night.
Oh no, you're doing great. You are doing great. So, all right, are we ready? When should your kids be on their own insurance? Off of mom and dad's policy on their own? And even a bigger question, when do you have them start paying for it? I'm going to ask Leann those questions, as well as some other things related to youthful drivers here coming up. This is Wise Money with Korhorn Financial Group. Thanks for being with us. My name is Mike Bernard, here with me at the world headquarters of Korhorn Financial Group and in the KFG studios, insurance advisor Leann Davis, along with Josh Gregory, as always. Want to say thank you to Bethel College Adult and Graduate Studies. There's some big news about Bethel recently.
Soon to be Bethel University.
Yeah,
That's
well, I
right.
think we're going to be talking about that more. So that's an exciting change, as well as thank you, Diane Bennett with Remax 100 for partnering with us on the Wise Money Show. If you have any questions, reach out to us. You can find us online, wisemoneyradio.com. You can call or text us, 574-222-2000. That's 574-222-2000. Or Facebook, YouTube, Twitter, just search Wise Money Radio. All right. Cost for insurance gets a ton of attention, and I get it. I mean, if you don't really understand your coverage and don't really know what it means, you know what dollar signs mean. You know what $1,000 costs. So oftentimes we focus on price, and we're saying, no, you need to make sure you have the right coverage first, right? But what are you smiling at, Josh?
I pick up on every one of your little misspeaks.
Yes.
But,
Yes, as long as
what
you're the only one.
$1,000 costs. But,
I appreciate
whatever.
I appreciate that. But what really increases the price is having kids and having those kids start driving. So youthful drivers, we've got a couple of questions here, but that increases the cost pretty significantly. Leann, is there anything that can be done when a child turns 16 or whatever age they get their driver's license? What advice do you give to help manage the cost?
Well, the first advice I give is encourage your kids to keep a B or better average in school.
Good grades.
Good grades are key. The discounts that they get for having good grades in school is phenomenal compared to not getting them.
Yeah.
Take driver's ed. Let someone teach them the rules of the road so they know. I know a lot of kids that didn't take driver's ed, and not that they have to, but it's another discount on your auto insurance if
Really?
they do.
I thought you had to.
You don't have to.
I felt like you had to when I was
My parents
growing
told
up.
me I needed to.
Yeah. Well,
They saw
Okay.
how you rode your bike.
Yeah.
Yeah.
So okay. So how does the insurance company know that you've got good grades? So
they do request copies of their grade reports.
does that come from you as the agent? Do you reach out and say, "Hey, give us"?
Well, when we first write it, yes, we ask for it up front. But every year as long as they're in school, every year they ask for it, and they'll just send the client a letter saying, please send us an updated
Awesome.
grade report. So they keep an eye on it.
Yep.
And don't buy your kids a new car.
I wondered. This is controversial. I know, because that's your princess. This is your.
Well, sure it is,
and
but it's costing you a lot of money.
Yeah.
There's only a couple of carriers out there that will actually let you rate the children on the car that they actually drive. The average person lets their kid drive the car that has PLPD on it.
Yeah. Which
Most carriers will rate them on the highest rated car.
Really? So you don't? Some carriers don't let you pick.
They don't
hey,
let us pick.
Wow.
And PLPD, for those of you, I'm not going to tell you what that means, but it's essentially just liability only. There's not.
there's
not a
no-
lot of other protection
There's
on
no
there.
physical damage coverage
right.
on that car.
So I thought that was.
I want to make sure I caught that though. Basically, what you're saying is most insurance companies will rate the child to, I'll say, the nicest car, the most expensive car. Could be mom or dad's Lexus or
Exactly.
BMW, and of course, a youthful driver on that vehicle, that would be pretty crazy expensive.
Hey, the family's making a new choice. We're all driving beaters.
That's right.
That's right.
We're all driving station wagons with the wood on the side. Yeah. What about defensive driving courses? Are those still offered? When we first launched our insurance agency back in 2006, we would do a couple of those in the summers, but I'm not hearing as much about them.
Not a whole lot are even offering that anymore. It's a
Okay.
question, but mostly it's for drivers that have had issues.
Okay.
If you've taken a defensive driving course to help with those issues,
Yeah.
but not so much with kids.
So here's what I did a couple years ago. I'd encourage you to do the same. And, my kids are young, so this isn't in response to the shock of seeing the premium go up with one of them being a driver. But I did that little doohickey that you can plug into your dashboard and it monitors your driving because it gives you a discount. I don't even know what it's called. But I've been recommending it to clients because immediately, basically with the company that I'm with, I plugged it in, and immediately I think it was a 20% discount automatically.
Really?
But then it monitored my driving, and so
now you're doubled?
I think I ended with a 12% discount, which is better than nothing. I did argue. You get online and you can see, okay, how am I doing with this discount? And it tagged me for a rolling stop and an abrupt stop. And I don't know. Maybe I'm just a terrible driver because those two things seem like oxymoron. They weren't
Rolling stop. That's a Michigan stop, right? You're a Michigan boy.
That's right. So it was going to pick up the kids, and at one stop sign, I guess I just kind of rolled right through, and the other one, it was like slammed on the brakes, and they ding you for both of those things.
Exactly.
So
Wow.
is that a good idea for youthful drivers? I mean, that can be a new discount if you haven't done that before to help manage that price.
It's a very good tool for youthful, especially youthful drivers, because when they get their driver's license, they're cool and they kind of show off a little bit.
Yeah.
I recommend it for
If you
youthful
accelerate,
drivers.
if you accelerate too quickly, they ding you for that. Rolling through a stop sign, they ding you for that. Accelerating,
Driving really late at night,
Yeah.
they'll ding you for that.
So that
But
is.
some people are like, yeah, no,
Okay.
you're not gonna watch me.
All right, so here, I do have a lot of people who have said, no, that sounds like inviting Big Brother into the car, and my
Yeah.
response is, they're already there.
Yeah.
So
Alexa is listening.
yeah, okay, so I'm gonna add on to this question here. So, if their driving habits influence the price, their good grades or lack thereof influence the price, their accelerating too quickly, abrupt stops impact the price, when do you ask them to start paying for it? Because if it only impacts mom and dad's price, then what do they care? If they're
Right.
getting a C average, or they rolled through that stop sign, all of a sudden mom and dad need to pay more. What do they care? When do you have a recommendation? You ever talk about when should kids start paying for their own insurance?
I actually do. I always tell them by the time they're 18, they should be at least paying their share. I don't advise taking them off of their own and splitting them off on their own because they're 18. They still live at home. Mom and dad is still responsible.
Is it more expensive to do that to separate them?
Yeah, because they're
usually is.
losing the discounts.
The multi.
They're losing all the
Yeah.
discounts. So
good
yes, absolutely more expensive to split them off.
Josh, what do you think? When should a kid start, or what happened with you? How did you guys do it?
Yeah, I mean, growing up, if I wanted to drive, I needed to be able to cover the insurance. And then if I wanted to drive my own car, I had to buy it and put gas in it and maintain it and everything. And, you know, I grew up in a family where driving was a privilege, not a right.
Yeah.
And maybe today's kids are just so busy that it's actually helpful to mom and dad that they drive. And so that's one way that they'll rationalize, well, you know, we as the parents will just pay for this and we'll buy the car because now they can drive the younger kids around, or they can get themselves to all their activities instead of being chauffeured. But at the end of the day, I think of this also as an opportunity just to instill certain values, work ethic, and the ability to manage some of your cash flow, manage your own expenses. So to me, it's a value judgment as much as it is an economic one. But you're right. I mean, there's coming a day when they are going to be peeled off of your insurance, and I wouldn't want that to be the first day they have that responsibility.
Right.
You know, let them have the experience of managing this automobile expense while they're under your roof, while you can kind of help guide them, instead of when they're off to college or even when they're out of college and into their own working careers.
Really quickly, Leann, speaking of college, someone's away at school, even if they don't have a vehicle, they've got clothes, they've got stuff. Is that automatically insured under the homeowners, or does someone need to get new insurance?
It is if they're staying on campus.
Oh.
There's a big difference. If they stay on campus, yes, it's covered under their parents. If they move off campus, which a lot of them do, not typically their first year, but their second year, they may move in with some friends in an apartment. They need to get their own insurance because then mom and dad's is not going to cover them anymore.
So rental insurance, you know what? We launched the show with what are the biggest mistakes people make. And if you're renting, the biggest mistake you're making is you likely don't have renter's insurance.
Exactly.
And I was naive to that too until I started working here. And so anyway, we've got listener questions and a lot more here coming up with Leann Davis and us here at Wise Money with Korhorn Financial Group. Went a little bit over there, but I wanted to sneak that part in.
Yeah, that's good.
That is good. See, there's
I
nothing to be
like
nervous
this.
about. This is
No.
fun.
Yeah,
this is fun.
You need to invite me again.
Yes, we will. This is fun. That's what we try to get to. The whole idea with the show, Kevin said, what if we're just sitting around a coffee shop talking about finances and people in the booths, you know, behind us are listening in. That's kind of what we want. Just we're chatting
Yeah.
about money and people get to eavesdrop.
I like it.
So cool.
I've watched the YouTubes, but I've never listened to the radio show.
That's all right.
Scott does
Yeah.
religiously every Saturday.
Thank
Really?
you.
He does.
Thank you, Scott, for your listenership, although you'll only hear this if you're on YouTube, so you won't. So pass that along to him. All right. Let's start with questions. Do you know much about the Airbnb stuff? Have you had experience with that?
I saw it on the outline. I was actually looking it up because I was curious myself. I actually didn't know. It's actually pretty complicated
Yeah.
if you're going to do that.
Well, of course, you know, answering this question, you don't need to answer all the details, but just at a high level. So you can say that. And
Do you know whether sheep damage is covered in an insurance contract?
For liability, yeah.
Just liability,
If it gets out.
not property damage.
No, it's not like it's vermin or
sheep.
anything.
The sheep.
if the sheep
Does
are
it
damaged,
get out and damage your property?
Well, yeah.
or
so
were you asking our sheep property? So if they're damaged,
if they're damaged, no. I mean, damage caused by the sheep.
got it.
Our sheep ended up in the swimming pool, and I wondered. Now this didn't happen, but it very well could have. Thankfully, they didn't drown. I don't know. They got themselves out. This happened
How
at
they
night.
get in?
That you don't ask that question. That's if they say sheep are the dumbest animal on the farm, but sometimes the farmer is, and that was a bad decision that got really bad. So, but if they tore the liner, I mean, that's a $6,000 farmer's mistake, right?
Yeah,
Not covered, right?
not covered. I
Yeah,
don't
that's-
know. I don't think so.
So we
Can't be
dodged a
liable
bullet
to-
there. That's
Can't be liable to yourself, and it's
right.
yourself.
Exactly.
It was a coyote that got in.
That's right.
Yeah, or if it
the
was
coyote
if it was
that
a
chased-
deer,
It was
I've heard of
that's-
deer ending up in
that's different.
that's
You don't
wildlife. I
own
don't
it.
own it.
Yeah.
So I'll repeat my question from earlier. Do you want any sheep for your farm?
No.
No.
How in the world, when you would take swim class in gym, they make you jump in with your clothes on, and it's so heavy. How in the world did these sheep survive?
I don't
because
know.
they've got all this wool. Had they
Right.
recently been sheared?
No, they weren't as fluffy as they will eventually get, but they weren't freshly shorn. Is that
Are
the
you
right
going to
word?
tease me again about? I
Is
don't.
that
I don't
right?
know the right function.
I think it's sheer.
Okay. Ed Sheeran.
Sheeran?
Sheared.
Sheered.
All right, last segment. 10 more minutes. And Ted's going to be here right now. So, all right, we'll get into Kyle's question, next question, and that's probably it. Thank you so much for being with us. This is Wise Money with Corehorn Financial Group. My name is Mike Bernard. With me in the KFG studios, Josh Gregory and special guest insurance advisor Leann Davis. If you've missed anything, we have talked about some really big issues relating to your home and auto insurance. Biggest mistakes to avoid. How do you know what coverage you need when there are kids going off to college, or all of a sudden kids get driver's licenses, make your insurance much more expensive? What can you do about that? If you've missed anything, every episode is on the YouTube channel. I'd point you there first. Just search Wise Money Radio on YouTube. Subscribe to it, like it, share it if you would like to. Also, every episode is podcast. So wherever you listen to podcasts, you can subscribe to it there as well. Just search Wise Money with Corehorn Financial Group. That's Corehorn with a K. And lastly, every episode's also on the website, wisemoneyradio.com. So plenty of ways to catch up on what you've missed. We're jumping into questions from fans of the show that relate to insurance, since we've got the expert here with us, Leann. First question from Kyle. Kyle's 42. It's from Mishawaka. Some friends of ours rented their house out for 2 Notre Dame football games and have put it on Airbnb a few times as well. My wife and I are thinking about it also, but what if the house burns down or they steal something? I like the idea of making a little bit more money, but I'm concerned about the risk. What are your
question.
Yeah, great questions happening more and more. And my little subdivision, you guys know we're talking animals and stuff today. Both Josh and Leann have funny farms. I live right in the middle of a subdivision. And yeah, I mean the first couple Notre Dame games of the year, our neighbors rented their house out right in the middle of a subdivision, 5 miles from campus. So how does this work? Should someone be concerned about that risk?
Yes, they should be very concerned about that risk. Your homeowner's insurance does not cover that.
Yeah.
However, I did find out that some of them will the first time.
Some homeowners insurance.
They will cover them the first time for one time only. But after that, it's considered a business.
Boy, that sounds a little.
You mean one rental only or
One
one
rental.
claim?
One rental.
Okay.
Like if you did one weekend,
As an experiment of some sort?
right, and they'll let you, and they will cover you. But after that, it's considered a business.
Right.
So it
That's
has
the
to
issue,
be-
isn't it?
yes.
And it's bigger than just Airbnb. It could be any kind of business that
Home
you're
away,
running.
well, anything that you're running from your home, it's a business. Once you start renting, you're making a profit. So it's commercial. It's not your
interesting.
regular homeowners. Airbnb and HomeAway both offer $1 million liability policies through
Okay.
their company. I don't know what their prices are, but from what I've been reading, it's a lot cheaper to do that than write a commercial policy on your home.
Do you know, and this is, there are lots of them. I mean, even locally here, there's Rent Like a Champion, which I like. It's a good play there, right there. So anyway, but are there deductibles and such that if someone, raids your closet, it's like, well, I guess that stuff's gone because I've got $1,000 deductible, or don't you know?
Right.
Don't you know?
Yeah.
Do you know? Are there deductibles on those Airbnb policies? The ones out the
Oh, the
million
Airbnb ones. Yes, there are deductibles on them, and I think you can choose from 1,000 up.
See, that's my thing. A house burns down or someone does something foolish and whatever. The big stuff. I guess I would expect that that's covered. You'd buy the insurance.
Buy it.
Right.
Insurance, guys.
Right.
Get the insurance. It's not worth the risk. But I don't know. I'm worried about I don't know. Someone just takes the couch on their way out, right? What do you do?
I think it's creepy.
Yeah, so I love the idea. I've got one of my closest friends. He's done it a couple of times. We actually are going to see them tonight. I'll probably ask
We
him.
have a number of clients that do it, and an interesting factoid about renting out your house like this. You can do that up to 14 days per year, and the income is tax-free.
So Uncle Sam tells you to do it.
Yeah.
I wonder with the popularity of Airbnb if Uncle Sam's going to change that ruling, because that ruling's been around for as long as for 15 years at least.
Yeah.
So, okay, so
I didn't know that.
Even if it's not my taste, economically, it makes a ton of sense. It really does. So if you're comfortable with the risk, then I would encourage you, explore it. Talk to your financial planner, because your financial planner should help you with the tax consequences and should encourage you on what type of insurance to get, and they might even coordinate with your insurance advisor. But gosh, get the insurance.
Make sure you're covered.
Yeah, get the insurance. All right, another great question here from Nick. Nick is 67. He's from New Carlisle. My father passed away last month, and I'm curious about keeping his house insured before we sell it. My guess is we won't list it for sale until the spring because there's still a lot to clean out, a lot of maintenance that needs to be done. That's pretty typical. Do I have to move the insurance into my name? And is there a problem since no one's living in the house right now? Ooh,
question.
That's a couple questions in there.
Yes.
So maybe it's circumstantial, but Leann, how could you help?
Normally, homeowners insurance, especially when there's a death in the family, they'll stay on the policy for, depending on the carrier, 30 to 90 days without you having to change anything.
Okay.
But after that, now he's talking about spring. We're talking.
Yeah, that could be 6 months, 10
right.
months, maybe.
We need to move it to a vacant homeowners policy. And we can help you with that here. We have a company that specializes in that. If he's the power of attorney, then the policy would be written under his name as power of attorney since his father's passed.
Okay.
But they can deny a claim if it's vacant. It specifically says in a homeowner's policy, if it's vacant, they will deny the claim.
So you've got a little bit of grace period to clean up.
Right, you got a little bit. Most of them are pretty flexible because of that. But if it's 6 months, then yes, you need to change that policy to a vacant homeowners is what they call them.
So 6 months is the magic time frame, though, you're saying?
3
Now-
months is the magic time.
Or 3, okay.
Yeah.
What if he's visiting the property on a regular basis and, he's mowing the lawn, he's shoveling the walks, he's there, maybe it's not daily, but
Right.
is there a way to consider it not be vacant? Because I'm assuming a vacant home policy is going to be more expensive because a home that's not lived in, that's being watched on a regular basis, things could go wrong and not get caught as quickly is the big issue, right?
But it's still considered vacant, and really, on a vacant homeowner's policy, you don't need to insure personal property because it's probably mostly gone anyway.
That's a good point.
That's
You're maybe a stove, a refrigerator, washer, dryer, maybe. So you don't have to insure that part of it. So you insure the home and the liability to protect yourself.
Well, that could be circumstantial, though. I mean, if it's vacant because of a deceased individual,
It may still have all the contents in it.
that stuff is emotionally tough to get through. I tell clients,
Yeah.
take some time and bring the Kleenex box or two, because going through that stuff is going to be hard. And when it's hard and emotional like that, you tend to put it off. And so, So make sure you're talking to your insurance agent
Make sure
if
you
something happens.
check with them because, like I said, a lot of them are pretty lenient about how long they'll let it stay empty.
How do you do this if you're you can't call the Gecko or Flo and ask these questions? And so, guys, we haven't said it yet. We're nearing the end of the show, but you got to have an independent insurance agent. You
Yeah.
have to. This stuff is just too complicated. Make sure you have what you need, but then the stuff that comes up in life, you're going to want an advisor who's an expert that you can talk to. Let me try and sneak in another one here that I know is near and dear to Josh's heart here. So Jen's 39 from Union. My husband and I moved to Michigan earlier this year from Indiana, and I'm shocked at how expensive the insurance cost is. I'm assuming the car insurance. Now that we're in a no-fault state, can I cut or reduce the other coverage limits so that the price is a little bit more affordable?
No.
No. Well, can you?
Sorry.
Yeah. Should you? No.
No, you should not cut you change your deductibles if you need to, but Michigan is notorious for being one of the highest rated.
I hear
states.
I think there's some legislation they're trying to work on that because the stats on no fault. I don't know. So listen to Casey Hendrickson's show Monday through Friday from 3 to 6 because I'm assuming he's talking about the latest and greatest. He's in Michigan.
Yeah, there's actually bipartisan support for this.
Yeah.
Has been for a couple of sessions now, but the latest bill seems to have a lot of support in both parties to remove that no fault.
But the big idea is when you have that sticker shock, don't all of a sudden say, cut everything.
Right.
We got to reduce this price.
You got to remember when you drive across the state line back into Indiana, the laws here prevail, and you need to make sure that you're covered and have high liability limits when you're driving in this state as well.
That's great. That's great. Good stuff. Great questions. That is all the time we have. Leann, thanks for being on the show.
Thanks for inviting me.
All right. So on behalf of special guests Leann Davis, Josh Gregory, myself, and all of us at Korhorn Financial Group, have a great weekend. We'll see you next Saturday for Wise Money with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management, LLC. Doing business as Korhorn Financial Group. KFG Wealth Management, LLC and Silver Oak Securities Incorporated companies are unaffiliated.